Check 1, 2.
Welcome, everybody, to the Insurance and Real Estate Committee's public hearing for Thursday, March 14th. Our first speaker this morning is Gerard O'Sullivan from the Connecticut Insurance Department.
Good morning. Senator Cabrera, Representative Wood, Senator Wang, Representative Pavlik D'Amato, and distinguished members of the Insurance and Real Estate Committee. I am Gerard O'Sullivan, Assistant Deputy Commissioner and Consumer Affairs Division Director at the Insurance Department. Thank you for the opportunity to provide testimony on 3 bills today. I will begin with our support of the department's bill and act concerning the Insurance Department's technical corrections and other revisions to the insurance statutes. The core mission of the Connecticut Insurance Department is consumer protection. The department carries out its mission by enforcing state insurance laws to ensure that policyholders and claimants are treated fairly. In addition, the department closely monitors the financial condition and practices of insurance carriers to help ensure that a healthy industry is available to provide a wide range of insurance products to Connecticut residents and to pay covered claims arising under the products provided. The purpose of this proposal is to make various technical changes to the insurance statutes. Such changes address the removal of outdated and obsolete requirements and the use of policies in another language. In order to make the department process more efficient, the requirements that insurance companies must file a paper copy of their annual statement and audited financial report with the department are being removed. The new requirement permits the department to rely on the electronic version of the documents as already submitted to the National Association of Insurance Commissioners. The insurance law currently acknowledges the use of non-English insurance policies in Connecticut. This proposal reinforces that Connecticut permits the use of insurance policies in any language and supplements the framework for the Commissioner's review of such policies. This framework includes a certification by the insurer that such policies adhere to the existing readable language requirement and places the burden of and risks related to translation on the insurer. The proposal also permits the Commissioner to adopt regulations to implement the new provisions. The Connecticut Clearinghouse program has become obsolete as the Health Reinsurance Association no longer has any covered lives and is no longer the issuer of last resort since the Affordable Care Act was enacted. As such, the department proposes to remove this section along with updating other sections of the law to reflect this removal. The language also includes a technical fix in moving the due date for annual pharmacy benefit manager report data submissions requirement back 30 days. The current statute language was incorrectly worded where the industry's March 1st data submission deadline is the same day as the report's due date. That does not allow the department adequate time to analyze the data, draft the report, and submit it to this committee. Finally, this proposal updates the definition of small employer, decreasing the maximum number of employees to no more than 50 rather than 100. Public Act number 15-247 increased the number of employees from 50 to 100. However, the Affordable Care Act permitted postponement of the increase by states, which the department did via Bulletin HC 106, before the change was ever in effect. The reduction reflected in the proposal is consistent with the current ACA definition of small employer. Before I go on to the next bill, are there any questions?
No, you can continue. Thank you.
I'm also here today to provide testimony in support of the department's bill, raised Bill 403, and act concerning market conduct and insurance licensing. This bill modifies various insurance statutes relating to licensing and market conduct to provide a more efficient method for the renewal of appraisers and adjusters' licenses and strengthen the insurance commissioner's authority and enforcement powers, thereby improving the department's ability to regulate the industry and to better protect consumers from questionable insurance practices. In addition to promoting efficiencies in license renewals, there are more substantive changes. First, this proposal broadens the commissioner's authority to impose restitution with interest to the victims of licensees who have obtained funds in violation of insurance laws, regulations, or any order of the commissioner. Currently, the commissioner has the authority to take administrative actions to address violations of law and fraudulent insurance practices, but unless a person has engaged in conduct that violates the Unfair Insurance Practices Act, is only authorized to suspend or revoke a license, impose a fine, or issue a cease and desist.
With those percentages.
This section,
98% of our students are from Connecticut.
This section is in line with provisions enacted in other states that allow for restitution in connection with violations beyond those involving unfair trade practices law. Second, this proposal authorizes the commissioner to apply through the Attorney General for an action to the Superior Court to enforce any of the commissioner's orders issued against licensees for violation of any insurance laws or regulations. Currently, the commissioner is unable to request the Attorney General file a court action on the commissioner's behalf to enforce any of the commissioner's orders, as the commissioner's authority to file a court action is limited to those actions to restrain or enjoin persons from violating any provisions of Title 38A. Without the ability to enforce an order in court, the effectiveness of any order issued by the commissioner is questionable and may preclude the commissioner from adequately protecting the public's interest. Third, this proposal imposes on any person receiving a request to provide information and documentation in connection with any investigation undertaken by the commissioner the obligation to comply within 30 days from receiving such request. Currently, there is no time limit set by law to respond to requests from the commissioner, resulting in undue delays in concluding investigations and consequently inefficiencies in the department's enforcement process. Providing a specified time limit for responses will increase efficiency and result in more timely remedies following misconduct by a licensee. Finally, this proposal provides for the authority to undertake market conduct examinations of third parties, providing various services to insurance companies to ensure that the department has oversight of the methods, decisions, and actions affecting consumers made or supported by such third parties, and that any analytical and computational technologies employed by such third-party companies comply with all applicable insurance laws and regulations. The services provided by such third parties could present unique risks to the public, including the potential for inaccuracies, unfair discrimination, data vulnerability, and lack of transparency. Market conduct examinations of such third parties would allow the department to identify and prevent the use of non-compliant methods and systems that could result in potentially unfavorable outcomes for consumers. It would ensure that third parties involved in insurance decisions have in place proper controls, safeguards, adequate processes, proper procedures, and the required oversight to promote fair and ethical outcomes from the use of their services, and better accountability and compliance with applicable laws. Are there any questions on that from the committee?
Yeah, I wanted to ask, thank you for that summary. I wanted to ask, are you moving in this direction because there's fraud, there's like, why are I feel like there's a lot of tightening up of the licensing requirements and, having oversight, having the AG, step in on behalf of the commissioner. Are there things that are causing you to move in that direction?
Yeah. Tony Caporal from our legal division.
Good morning. Yes, we had cases recently in which the commissioner had imposed an order. Specifically, was a gentleman who is currently sitting in jail because of what he did. And the department went to a hearing. The commissioner imposed an order of about $1.2 million that and asked if the person was willing to make restitution to the victim to forego some of the fine. The gentleman never paid the fine, never made any restitution, and the commissioner attempted to have his order enforced in court, only to hear that he did not have the specific authority to enforce any order, just those orders that impose some sort of declaratory penalty on the licensees. And obviously, we are in a situation, given this precedent, that the commissioner has no teeth, so to speak, has no way of enforcing his order other than through administrative action. For example, the commissioner can take somebody's license if they fail to abide by the order, but all this becomes moot if the person no longer has an a license, because the license was revoked. And because of that, we're just looking to tighten up the statutes so any order, lawful order of the commissioner can be enforced.
And the Attorney General's office is on board, is supportive of this?
Yes, it is. And as a matter of fact, we received, and Jim, you can confirm, we received an invitation to even make the language a little stronger than we currently have it drafted. And quite frankly, I don't know where that's staying.
So is the request to make this change statutorily based on just that one case, or have there been others?
That's just based on that case.
Okay. I want to talk about the third party vendors. I think we're referring to them. It's my understanding there may be some room for improvement on this, or potentially some changes. I've personally heard some pushback on this. I just, want to make sure that, we are not preventing, companies from doing business here in Connecticut and putting restrictions on them that are, unnecessary. I trust you guys completely on that, but are there additional changes that may be happening there?
So we received some input yesterday afternoon, and our legal division is reviewing it, and we'll be back in touch with the committee.
Great.
And Representative Wood, if I may, I just wanted to point out that the language that we have is actually more restrictive, that similar language that is both in the NAIC Model Act and in the statute of other states. For example, some states like Rhode Island, like New Jersey, like Illinois, they have statutes that relate to market conduct that allow basically the commissioner to examine any third party that may have information on the insurer. Any third party with no qualification at all. We didn't want to broaden our language as much, and so we qualified what we had in the statute. But we think that based on what we are looking for, there is not much chance that insurers will suffer prejudice because of the department examining such third party. At least we don't have any information showing that these other states have suffered some sort of a diminution in services because of this commissioner's authority.
Great. Thank you. Please continue.
Lastly, I am here to offer testimony in opposition to Raise Bill 5250, an act concerning self-storage insurance. Raise Bill 5250 provides that owners of self-storage facilities to offer or sell self-storage storage insurance policies to their clients in Connecticut. The bill, however, does not require a license examination, insurance education, or other evidence of competency or fitness to obtain such license or participate in this type of insurance business. An additional concern is the bill would allow employees of a licensed self-storage facility owner to sell self-storage insurance product under the owner's license, also without the proper qualifications established in state law. Currently, any person selling, soliciting, or negotiating property and casualty insurance, including insurance covering property stored in self-storage facilities, must hold an insurance producer license with the property and casualty line of authority. To obtain such license, applicants must show they are knowledgeable, properly qualified, trustworthy, and that granting such license would not be against the public interest. In part, this requires the applicants complete a course of study and pass an examination testing their knowledge of the type of insurance for which they seek to be licensed. The type of insurance consumers require when storing property in a self-service storage unit is a complex product that covers a variety of personal property stored or in transit to the storage facility. This requires knowledge about insurance policy terms, conditions, exclusions, and applicability of any other existing insurance coverage. Because of the product complexity and the potential for significant losses, it is the department's position that appropriate protection of consumers requires that self-service storage insurance sales be handled by knowledgeable and qualified insurance professionals. House Bill 5250 does not afford consumers this type of protection. Raise Bill 5250 also excludes self-storage owners from all insurance licensing requirements if they only display or make available to their clients promotional materials relating to self-storage insurance created by insurers authorized to write property and casualty insurance in Connecticut. While this in isolation may not be problematic, the bill also allows unlicensed self-storage owners to engage in other activities that typically require licensing as an insurance producer. The combination of marketing and these other types of activities may cause confusion for the consumer as to who is the responsible party for the insurance sale. This proposal would provide the owners with responsibilities typically reserved for licensed producers without protections provided by regulatory oversight. Acting in the best interest of consumers, the insurance department does not support this proposal.
Thank you. I wanted to ask some questions on that. So, I mean, this is allowed in other states. And it's allowed right over the border in Rhode Island. Why is the department always pushing back on this? I know this has come up year over year. You know, kind of going back to your market conduct, you know, response, this is happening in other states. Here we're talking about something that's being done in other states. Is there no like NAIC model on this or NCOIL model? What's the department's pushback? I mean, I feel like I can go rent a car and I'm buying some kind of insurance with that. I can go purchase a cell phone and I'm buying some sort of insurance with that. You're going to self-storage. I would, you know, if I have valuable things in there, when I move something in, I would want to just say, hey, I want to, you know, put an insurance policy on this.
Oh, yes, Representative Wood. We understand the problem is that there is only a very few states that allow that kind of insurance. And compared to the lack of protection for the policyholder, at this time, we don't think that that's an appropriate product that can be sold in Connecticut without the proper licenses. And I understand your point about renting a car and getting insurance. Insurance companies, rental companies, believe it or not, they filed with the department to be self-insured and to provide that kind of insurance. This would exempt the owners of a storage facility to forego altogether any type of license, any type of responsibility towards the regulator, and to have absolutely no knowledge of insurance to provide this kind of services. Obviously, I understand that somebody that puts their belongings in storage would like to have them protected. But most of the time, these belongings are protected through the person's homeowner's insurance, for example. And that's why it's very complicated, because now if you're offering insurance that, by the way, is very limited, my understanding is that is around 10, 15,000 at the most. You're offering this insurance, first of all, without somebody really knowing what they are doing. And you're creating problems, for example, for the homeowners who might be covered under his home or her homeowner insurance, but might not be because they purchased this coverage. So that's why the department is very concerned and would like that people offering this kind of insurance have at least minimum qualifications to know that they know what they're talking about.
So if I'm an apartment renter, I have homeowner's insurance on my belongings in a storage unit,
If you are a renter, you may have rental insurance
but you don't
that
have
would be
to.
covered. You don't have to. That is correct.
Okay.
And at this point, we are not opposed to the rental or facilities owners offering this insurance. That's not what we're talking about. We just would like them to offer him after making sure that they're qualified to do so.
Okay. So you would be fine with it as long as they complied with having the same producer license as other people selling insurance.
That is correct.
Okay.
Yes.
I just have one other question on a bill that is on here, but you didn't reference. We are getting a lot of concerns regarding auto insurance prices, and we put in a bill, which, you know, we really don't have to put in a bill. I'd love to work with you guys on something like this, but, you know, all of these, you know, really the issue is reckless driving and costs of, you know, fixing. There's a lot more accidents than ever. Thankfully, not as many motor vehicle deaths because the cars are safer, but they are much more expensive to fix. And, you know, people's premiums are going up pretty significantly every year. A lot of these carriers have safe driving apps that you can, download while you're driving. And I think we should look at ways that we encourage people to download that. The person that was going 100 miles an hour on the way to work this morning, weaving in between all of those cars, I would love if that person had that app. So, it just your thoughts on, kind of the state of things, the expense of, auto coverage, and if this is something that we should further explore.
Yes, thanks for bringing that up. We, in consumer affairs in the complaint area, we do get a lot of those concerns from consumers, and we do try to walk them through the options that they have for, adjusting deductibles and making sure that they're shopping their insurance around and getting all the discounts that they're entitled to. And that's definitely something that we're trying to increase our outreach to consumers. But, as you said, the cost of these sensors on the newer cars are very expensive, and you're getting the car that does have these very expensive modifications getting hit by a car that doesn't have them. So we're running into those issues with those costs. And, hopefully, as we get further into this and all these cars have become standard, equipment on them, hopefully those will lower the incidence of accidents and rates overall. But it is something that we definitely try to tell consumers, get out there, make sure that you understand what reductions in premiums are available, and those, monitoring of the vehicles and the stopping and starting. That is something that can offer a significant discount to people.
Great, something we'll continue to work on. Representative Meskers.
Pardon, the traffic was challenging, so I was a little late to the testimony. So I have a question going back to renter's insurance, or storage insurance, right? And I'm trying to get the parallel in that, when I go to rent a car, the guy who rents me the car always provides me with insurance. So when I'm renting a storage facility, I would be particularly concerned. I'm trying to envision the profile of the renter and how many of them will have homeowners insurance. And I'm thinking it's likely it's storage because people are either moving or they're renters. And given the cost of rentals, given the financial precariousness of many people, I'm wondering, like, the issue of, I think these might represent most of a person's possessions, and why we wouldn't want to see that rental occur, or why we wouldn't want to see the insurance offered directly on, or is it just the obligation to offer the insurance? I mean, like, I'm trying to figure out the objection or concern.
Thank you for your question, Representative Meskers. As I said before, we are not concerned about the insurance being offered by the storage facility. Obviously, consumers who are in need of that product should be able to get it. But we are concerned about the qualifications of the person who's offering that insurance. So we wanted to make sure that at a minimum, there is a proof of the proficiency in the kind of issues that they are dealing with by offering insurance to me as a consumer. Obviously, it's desirable that I obtain insurance, but it's desirable that I obtain the right type of insurance, the right coverage, and at the right price. And our concern is that if storage facility owners are able to offer it with no qualifications whatsoever, without even being vetted at all through an examination or otherwise, that at the end, the person who might suffer because of that is the consumer who may not get the kind of insurance that he or she needs.
I won't disagree, but I'm trying to figure out the differentiation between when I buy a product and I walk into Apple and they offer me Apple Care. When I go to Avis and I go to rent a car, they don't ask me, can I look at your insurance policy, your homeowner's policy? Can I look at your credit card? Can I see what other coverage you might have? So I'm not adverse to, I think what you're suggesting is that people may be maybe sold a product they don't ultimately need. But I'm concerned on the opposite side that if I can't get the product offered and sold at the point of the loci where you rent your space, or if I require a licensing or restriction on the offering, I think you begin to make it more of a hurdle to get the insurance purchased. And that's my concern. Like, I'm not sure that the guy at Apple, how many insurance courses he's taken. I mean, as much as I might love him.
Yeah, and just from, consumer complaints and cases we handled in the past, the rental of a vehicle, you know what the value of the vehicle is, the phone through Apple, which we also do have responsibility for those policies as well. You know what the value of those are. When people are purchasing insurance through a storage facility, as Tony had brought up before, there's often just very minimal coverage on that. And you don't know what the person is storing in there and how much they need and what coverage they may have under a homeowner's policy or a rental policy.
I'd love to come back to you on that. Pardon me, Chair of Indulgence. Maybe the answer is a descriptive or disclaimer by the commission about, this insurance coverage is capped at a maximum of, or it might be a disclaimer not in 6 pica, but at the same size as the contract, a disclaimer that's required with that contract saying, make sure you've adequately assessed how much you need the insurance for, make sure that the dollar amount is reasonable. I don't know what kind of disclaimer to give a consumer a little more adequacy, but I can tell you what, like I said, it's 15 pages at Apple when I signed the contract for their insurance. And I won't ask for a show of hands of how many people have read the 15 pages when they purchase their Apple product and they look at the warranty. So I appreciate it. I'm just concerned about not offering the product until someone's appropriately licensed. And you're concerned that a person might be buying a product that they don't either need or doesn't provide the right coverage. That's kind of the concern.
And if I may, there is also the concern that if there is no accountability in terms of having a regulator watching after you or, of what you do, there could also be the tendency of offering products that are not really needed just for the sake of offering and, making a commission on it. That's also a very big concern. As far as the phone, the phone comparison, I understand that there is insurers who offer the kind of coverage that cover my phone, my Apple, my Motorola, whatever it is. The difference there is that, as Gerard pointed out, this is a very simple item to take care of. You have a phone, the phone breaks, we'll give you a similar or identical phone. That's pretty much what's involved. With renters is a little more complicated. I'm sorry, with people who store their belongings in rental facilities is a little more complicated than that.
Representative Delnicki.
Thank you, Madam Chair. There's a subtle irony to the discussion we're having right now pertaining to storage insurance. Because many years ago, I rented a storage unit and was told, well, you've got to take out this insurance. Literally told that. And I didn't have the wealth of knowledge I have now when it comes to dealing with these issues. So I took out the insurance at $10 a month. And I don't know exactly what I got for coverage. And every year I typically would talk to my insurance agent that provided me with automobile coverage and homeowners, et cetera, and recounted that to him. And he said, well, you're covered. Now, there I am, and I go back to the storage center, and I looked at the gentleman there, and I said, my insurance agent told me I'm covered for this already. Why didn't you at least make me aware that it might be in my homeowner's policy or give me some kind of information ahead of time as to what rights I have as somebody who's actually renting a storage unit? And I have to be honest with you, that would have been a big help. I wouldn't have wasted a couple $100 over a short period of time that I didn't need to spend. So I can understand why you brought that issue up. And I can also understand why that could very well be something that's needed. At the very least, there should be some declaration given to a person renting a storage unit that check your policy, because you may already be covered for it. And the individual then renting the unit would then say, great, I've got coverage for it. Now I have to go and I have to get a declaration from my agent that I was covered for it and provide it to them. So I see both sides of the issue, but I'm tending to lean towards your commentary pertaining to some level of knowledge whoever's selling that insurance has to have. So just a couple of comments anecdotally on the issue. Thank you, Madam Chair.
Thank you. I don't see any other questions. Thanks for joining us this morning. Next, we have Joe Doherty from the Self Storage Association. Joe, you're on.
Thank you. Good morning, Representative Wood and members of the committee. My name is Joe Doherty. I'm with the Self Storage Association in Alexandria, Virginia. I want to take just a little bit of time to provide some background testimony and then address some of the questions that were raised by the committee and concerns raised by the department. So first off, the property stored in a storage unit is in the care, custody, and control of the storage tenant. The storage tenant is responsible for insuring that property. The self-storage owner doesn't have an insurable interest in the property, and they cannot insure it on their own, and it would not be covered under the facilities insurance. Approximately 50% of storage tenants are in some form of transition and or do not have a homeowners or renters policy that covers their property in a storage unit. Moreover, the standalone insurance that might be able to be acquired by through an independent insurance agent is typically not offered because the commission payments to those insurance agents are quite low. As Representative Delnicki pointed out, the typical cost of these policies is very low, $10 a month or something along those lines, and a commission on that type of payment would be minimal, and therefore there's little to no incentive for an insurance agent to offer this. Contrary to the department's testimony, 42 states have solved this gap in coverage by permitting self-storage owners to offer storage insurance to their tenants. These policies are underwritten by well-known companies such as AIG in Hanover. And I think it's also important to point out that the way these policies are handled, there is always a fully licensed insurance agent involved in the process. That is the person that provides the disclosures to the consumer and is available to answer any questions from the consumer. The issue is that the person who is at the point of sale is not licensed, and this bill would permit those individuals to offer this form of insurance without a license. These so-called limited lines laws are in place in all of the neighboring states in New England, including New York, Massachusetts, New Jersey, Vermont, and in Rhode Island, where instead of licensing, they provide for an exemption from licensing. The National Self-Storage Association and the New England Self-Storage Association support the creation of a limited lines insurance license in Connecticut for self-storage facilities to offer storage insurance to their tenants. I just want to very briefly point out a couple of highlights, especially the consumer protections. First and foremost, we believe one of the most substantial consumer protections is the one I've already mentioned, that there is always—
3 minutes are up. If you could please summarize.
Yes, of course. So we believe the most important consumer protection is that there's always a licensed insurance agent involved. The other important ones are that there are disclosures that go to the consumer acknowledging that this type of coverage might be duplicative and that they have the option to decline the coverage if they do not want to receive it. I'm happy to stand for any questions from the committee. Thank you for your time.
Great, thank you. You had mentioned that there is a licensed, and there's a licensed agent that is available. How are they available? Do you call them? So I'm standing there at the desk and I'm being offered insurance coverage. If I want to ask questions, how do I ask questions?
Yeah, so Representative Wood, the questions, so the way it goes is that I think in the scenario similar to what Representative Delnicki presented, although under this bill it could not be compelled, they would say, we offer this insurance here, and here is a brochure. That's a brochure that is provided consistent with the with this bill, or would be provided consistent with this bill, and that brochure has a variety of disclosures, and it also has the phone number for the insurance agent to be able to make a call to that agent and say, I want to know more about this coverage, or I have homeowners, is that going to cover this? Those types of questions that a consumer might have. The individual behind the counter is not equipped to answer those questions and is instructed in the mandated education not to answer those types of questions.
Great, thank you. Representative Meskers?
So I'll take the opposite approach I took with the last person who testified, in that I was questioning the insurance commissioner why we didn't want to sell the product. So in your case, the strictures, what did you say, 27 states or 47? I lost the number. You said that are already doing this.
42.
42. So I got totally wrong. There was no 7 involved. So at 42, is it standardized or are the disclaimers differentiated? My concern is the opposite concern. I think I want to see this offered as a product. I want to make sure the disclaimers are adequate. So I would be worried that the best piece of insurance I could sell as an insurance salesman is an insurance product that's duplicative, that will never be claimed on, because the premium income is going to accrue either to the insurance company or the salesman or the storage owner. So I want to make sure that the product is actually a product that's going to have demandability of utilization and applicability to the renter. So I'm wondering what kind of disclosure is, what the range of disclosure is, and it would help if you let the committee see the range of disclosure, because if I want to advise, or we want to advise the insurance commissioner that we think it's a good product moving forward, that the scope of the disclosure or disclaimer is sufficient so that the guy who buys it actually needs the insurance. And ultimately, the insurance can be triggered and used, because paying for insurance you either can't trigger or use only benefits the person I'm mailing the check to. Do you follow that?
I do, Representative Meskers. So the disclosures are addressed starting on line 200 of the raised bill.
And are they universally the same on the 42, or are there different disclosures? My question.
There's a little bit of variety, but because the groups that are selling this insurance are typically national outfits, they've standardized those to make sure that they comply with all of the states where this type of sale is permitted.
Okay. Thank you. That's all my question. Thank you, Madam Chair.
Any other questions? Joe, thanks for joining us today.
Okay, thank you.
Next up, we have Anieo Farino.
Good morning, representatives. I'm Nello Farino. Thank you for having me to give my testimony and personal experience regarding the topic at hand and how it relates to title search industry and the increasing population of young homeowners. My credentials are: I have a bachelor's in public and political science, and I'm going for my master's in public administration. My experience and concerns first began when I did a period of time in the tax collector's office of City of New Haven, where I handle issues with the public and companies regarding tax records of properties, also with payments. From there, I wanted to go into the title search industry, but once doing my due diligence and researching Due to extended family and professional friends, I realized the liability and issues in that industry and how low regulations cause an issue for young homeowners that could face litigation. Because of that, I changed my career path and went into the profession of judicial marshal to the state of Connecticut, where my concerns only increase due to my exposure in the housing court and seeing how the regulations of the title search, low regulations of the title search industry and other real estate insurance problems have caused people to face litigation and also deal with the liability of issues that they did not cause because they went through unaccredited sources to get to their problems. Many homeowners and tenants have both faced problems due to these issues of low regulations. And as an increasing population of a younger generation of homeowners who view real estate as a passive income, which in hindsight is far from, they are cutting corners and dealing with sources out overseas to do their administrative work and paperwork, such as title searching. And because of that, they are not properly done, and due to that, they are facing litigation. I believe that it is the interest of the state and both the public interest to increase regulations to assure that no unaccredited sources can do any damaging work to them due to them being uneducated. I will thank you very much.
Great, thank you for that. You really shared a lot with us here. So how can an overseas company conduct a title search in the state of Connecticut? How is that even possible?
Due to outsourcing. Today's society, a lot of things are outsourced to overseas companies due to low regulations. And it is not, in other states, they also deal with that.
Well, I think my question is really let me rephrase it. How are they able to do a detailed and accurate title search if they're sending the work overseas?
That's the issue that that's the issue that I see in court. A lot of times that people who are facing litigation, whether it be the homeowner or the tenant, because mainly the homeowners as they do the administrative work overseas, they are not seeing the little line issues within the title search. And because they're done overseas, they are generated over, the title searches are generated over a blank format without actually doing any research into it. They, because the younger generation of homeowners view housing as a passive income, they are not mindful and neglect these little issues that in court sways the judge to be against them.
So you're asking us today that we need to put more regulation around the process of title searching, and that having companies currently send things overseas are causing homeowners to have, be in court for certain issues. Can you give us some examples, of this happening here in Connecticut?
Without giving actual names or anything regarding court, basically a lot of things that are found after further investigation through lawyers with administrative paperwork such as title searches, that they are not reflecting the actual status of the property, and little things are falling through the cracks and the liability falls upon the homeowner, not the person who does the title search. So I am pushing for higher regulations on title searching. So people who are in state and in-house more who deserve these license and or actually accredited can actually help out the public in terms of homeowners, making them more safe to any kind of neglect.
Is there any sort of accreditation now, or how do you become a title searcher?
You would need to go in front of a board and they would have to look into your work and whether or not they believe that you will have it accredited and you have the best interest for the homeowner and the title search.
So that is how it currently works?
Vaguely, yes.
Okay,
I again, like I said, I did not pursue the title search company. This is what I experienced. This is
Okay.
what I experienced in court, overhearing all of the
okay.
testimonies.
So if you're overseas doing title searches, are you not doing that accreditation process?
It's vague on how exactly that works due to the low regulations of the title search industry.
Excellent. Thank you. Any questions from the committee? Thank you for your testimony. Next, we have Kim Ora.
Good morning. Thank you all for your time. Representative Denning, Senator Anwar, Representative Wood, Barry, and Meskers. Thank you all for your time this morning. My name is Kim Arrow. I'm the president of Aetna Ambulance and Ambulance Service in Manchester. Both companies serve the Hartford and Tallinn counties, and we respond to over 50,000 emergencies a year. I'm here today on behalf of all EMS providers across the state to thank you for raising Bill HB 5460, an act concerning healthcare insurance coverage for ambulance services. We stand in strong support of this legislation. As you are all aware, our rates are regulated by the DPH every year when we apply annually for our increases. And we feel very strongly that this is a well-regulated system, and it's benefited the state that our rates are actually much lower than our surrounding states. In recent years, our two companies have had issues with certain insurance claims being denied on 911 calls because the patient did not obtain a prior authorization before being transported. I want you all to think about this. Your loved ones are in an accident or dealing with a severe medical crisis. And if they're not capable of calling the insurance company, if they're lucky to have someone near them, the thought of having to call for an authorization to be transported is not reasonable. So our concern is that this is just recent. It's been in the last year and a half this is occurring, but we want the language to be modified because it's ambiguous and can be held, asked for interpretation on the insurance side. It's just not reasonable for a 911 call to have to make that extra step after calling 911 to call the insurance company and ask for an authorization. So there is a term that we would like to see removed from the proposed language as it is ambiguous when medically necessary. This simple phrase leaves it open to interpretation. If you all could consider having that removed, we would appreciate it. And this does benefit all providers. As you know, we have over 160 providers. Many of them are volunteers. Many of them are very small agencies. For them to battle collecting these claims over something that seems very unreasonable is just not right. So we appreciate your time. If you have any questions, happy to answer them.
Thank you. And, you know, you've had a lot of us in and, you know, we toured and got ride-alongs and stuff. And we appreciate your time and your staff's time in educating us. So, you know, it just seems a little crazy, I think, to think about the scenario of requiring a prior auth. So, you know, the merits of the bill obviously are valid. I just want to play devil's advocate for a second on the medically necessary removal. So I am at a nursing home and I can't find someone to transport one of my patients or my mother or father or something, and I call 911 and move them to another nursing home. Would we get into, or move them to another facility? Are we getting into you know, issues if people are starting to call 911 to require ambulance, or would you not even respond to that?
Yeah, that would be a different type of call
Okay.
if it's from a nursing home.
Yeah.
These are from roadside or home residence, place of work. If it was from a nursing home, that's a different type of transport, and it wouldn't be considered a 911.
So
So I guess what I'm referring to, maybe just to say that that would be for just 911 emergency responses. To remove that language for emergency responses is what
Okay.
we're most concerned about.
Okay. Yeah, I think
Heather
that,
may be able to clarify, but I think she'd agree with that, yes.
okay,
I mean, prior authorization is common with the other types of
right.
non-emergency type transports, so.
Okay, perfect.
it's
I
with-
think that makes sense. I just
Yeah.
want to make sure we're not leaving it up to
Hmm.
unlimited interpretation
Yes.
of you're stuck and you call 911 for a ride. You know
Right.
what I mean?
Right.
Which I know, I'm just playing devil's
Mhm.
devil's advocate here. Yeah, I have no questions. Senator Anwar, followed by Representative Meskers.
Thank you, Madam Chair. Good morning. Good
Good
to see you here, and thank you for the work that you and entire fleet of people and community that you're serving and on behalf of the community. I can, there's no secret that the EMS services are going through a big challenge at this time across the board between the Medicaid payments and free service as well as from the insurance issues. Can you give us the numbers? How frequently are you seeing the challenges where the insurance is going to deny the payment?
So it really has just cropped up in the last year, year and a half. And for our two companies, it's about north of $20,000 of claims. I don't know I can't speak on behalf of all the others. So it's not significant. It's just, we don't want it to continue.
Right.
And I think just slight modification of language could prevent it.
Right.
We've seen that happen before. If you don't catch it early, it could become a chronic problem that could, be pervasive.
And is it increasing the administrative burden on your part?
Oh, yes. And that's the part that's so challenging and frustrating. We'll do the appeal and still get denied. So the time and effort for our people to go through all that. And I just want to say the smaller agencies that probably use a billing service, but still,
Right.
they're inundated with so many other things to have to deal with the filing of the appeal. Appeals are time consuming.
And the other challenge is that if the insurance isn't paying, that you would end up sending the bill to the patient.
Typically, no, because our situation, we contract with a lot of insurers and we're not allowed to do that. So.
Okay,
No.
good, good.
No.
So this makes perfect sense.
Yeah.
There's no luxury a person has in an emergency to call and get prior authorization. Even on a good day, it's very difficult to go past some of these telephone lines. So
Yes.
thank you for raising this awareness. It's a
Thank
good
you.
bill. Thank you. Thank you, Madam Chair.
Representative Meskers.
So I'll echo the comments of the chair. I think first, or start with first, obviously.
Mhm.
If I make the call, I
Mhm.
want someone to come pick me up. And I appreciate what you do for a living, and I appreciate the service you render. I think the clarification from the chair in terms of emergency versus non-emergency services are important.
Yes.
If and when I get an insurance person to testify on this bill, I'd like to get an annual report on utilization and service, estimates of the benefit. I want to make sure that, 95, 98, 99% of the calls are at all levels medically justified or mostly medically justified, because the cost will be borne by the consumers if I wouldn't accuse either of you. But the public tends to use a 911 for everything from, I've got snow in my backyard. I call, I know what my 911 calls end up like. And I'm not sure that, I think that medical necessity or some assessment, and not necessarily put the burden back on you financially, but be able to sit there and say, this is where we think we are getting an abuse of the system that's taxing your resources, taxing the resources. There are unlimited resources at the insurance company until they raise my premiums by twice as high, right? So I want to make sure that we get adequate utilization. So I think the clarification that we've mentioned is probably the right one to go with this point.
Certainly, I appreciate that question, and I certainly understand where you're coming from. And we welcome, the opportunity to try to figure out a way to diminish that, because
Right.
I understand that concern.
Perfect.
But it is hard to leave that language in there and not leave it up to someone to determine whether it's medically necessary or not on the back end is tough.
Yeah, and ultimately, I think the issue
We-
is it's unfair to expect a small agency to do that.
Right.
And two, I think it's incumbent on a major company and policy underwriter to sit there and come back with reports about This is where the system we think is being abused, and work collaboratively to curtail, over dependence. On the 911 to move people around because it's difficult we want to make sure that when I call 911, they're not in the transportation business, but come to my house
Mhm.
and take care of a real medical emergency. So we got
Right.
to figure out, I
I'd
think
welcome
that
it.
that's a come.
Conversation for that.
Yeah. Perfect.
I think that's a good point.
Thank you,
Welcome
Madam.
that.
Representative Denning.
Thank you, Madam Chair, and thank you for the work that you do. The sound of those ambulances arriving have ruined many of my nights at the hospital, knowing that I was going to be doing surgery. Just to understand this issue, when someone dials 911, they don't necessarily get a hold of you directly, correct?
Not,
So
not
so it's actually a dispatcher
a dispatcher, yes.
who has made the call that you need to go, or do they screen them at all?
No, we have to respond.
So if someone calls and says, I need a medical emergency,
Mhm.
they immediately transfer. There's no screening of
There's no
medical
screening.
decision at all at that point. Okay,
Correct.
what about people who call you and just say they need a ride to the hospital because they can't get there any other way? You still
If it's through the 911 system, we have to accept the call. and
Okay,
transport.
very
We're
good.
obligated. That's
Thank you for-
our medical protocol
great. Thank you for clarifying.
through the 911 system.
Okay.
Thank you.
Yes, thank you for your time.
Next, we have Jacqueline Purcell.
Good morning. I want to thank you all for being here and allowing me to speak. I do have written testimony, and I made a copy for all of you because, as Representative Wood knows, I can speak hours on the subject of title searching and regulation. So in fair just of my 3 minutes and the fact that I had 1 cup of coffee, I would love to be able to give you all a copy of that and just do a few bullet points that I have put together. So I can speak. My name is Jacqueline Purcell. I'm the president of the Connecticut Land Title Association. I'm a member of the American Bar Association on the Real Property section, the Connecticut Bar Association on the Property section, and a certified fraud examiner. And I've been a title searcher for 25 years. So I've also do expert witness testimony in court on property disputes. So I would love to say that I'm an expert in this field. I'd like to correct Mr. Farino. There is no regulations. There is no, to be a title searcher in the state of Connecticut, I can just decide one day, I'm going to be a title searcher. And quite frankly, 25 years ago, that is what I did. I taught myself. I became a title searcher. There's no licensing. There's no regulations. There's nothing surrounding this profession. And it's also the only profession in the real estate industry where there is no regulations. Recently, on President Biden's State of the Union address, housing was a very large part of that. And we passed a bill, the Federal Housing Financial Agency passed a bill for a pilot program called Title Policy Waivering. And what that means is that when someone refinances their house in certain circumstances, there does not have to be a title insurance policy issued on the lender side. We do outsource most of our title searches to India currently. The reason why we cannot do that is they are doing searches online. We now have a third-party organizations, and we have 169 towns, right? And all of those towns are separate municipalities that do things very differently. There's only 3 states in the country that do it the way Connecticut does. So to have somebody overseas doing a title abstract or a title examination or search is the most reckless thing I have seen since 2008 in the mortgage industry. And back then I was a loan officer and a paralegal. And I foresaw the decline because of lack of regulations. I think that with the Department of Consumer Protection, we all agree we need to look at this subject, I think. Department of Consumer Protection says that they don't have the resources for research, analysis, and planning on that stuff. However, it's been done. It doesn't need to be reinvented. It's already done. I personally, I have my master's degree in criminal justice with a BA in research sociology. I've personally, for the last 3 years, been researching this. 13 states currently.
Your 3 minutes are up. If you could please summarize.
Okay, thank you. 13 states currently do have licensing. And this government has already done this. So in my proposal is in my written statement is to give you that information in a report format so it can be looked at closer, so we can get this regulation done quicker than 2025. Thank you very much for letting me to talk. And I'd love to just be able to hand you.
Yeah, you can hand them to Ally.
Okay.
She'll give them to us. But
Okay.
before you get up,
Oh, yes.
we do have some questions for you.
Yeah.
So, is there a state in particular that's doing this right in terms of regulating, or could you tell us what the ideal regulation and oversight of title searching would look like from your eyes doing this for 25 years?
Yeah. I think that right now, North Dakota, South Dakota, Kansas, Minnesota, West Virginia have it right. More and more states are following their model. Their logic model is amazing. And what it would look like for me it's being done already, actually. You have to be licensed to be an investigative researcher in Connecticut. It's not done through consumer protection, it's done through special licensing and emergency, the Department of Firearms and Special Licensing. And the definition they use of a private investigative researcher is a title searcher. So we don't have to reinvent the wheel. We don't need to put financial resources. To me, it would look like taking an exam, a PSI exam like I just took for my real estate license. And in my real estate classes, I'm learning Title Search 101 from a licensed realtor because they need to know it. But you don't have to be licensed to actually perform the title search. So I think looking into the future, very near future, I think that a certification for an accreditation or licensing would be sufficient after taking an exam. To be a notary public in this state, I had to take an exam. In the real estate industry, when I purchased my home, I had to have a licensed realtor, attorney, home inspector, home appraiser. And quite frankly, we've had so many discussions on this. So many. We talk about stakeholders. Who are those stakeholders? I'm not a politician and I don't know a lot about that. But when we talked in our discussions about stakeholders, we talk title companies are speaking, who are the same very companies that are outsourcing. Attorneys speak. I think our stakeholders, we have a due diligence for our stakeholders to be homeowners, property owners, but there's such a lack of education. Property owners don't even know what a title searcher is because it's not disclosed in a closing. They don't even know that. I've talked to over 300 homeowners and they say, wait, what is a title searcher? So the Connecticut Land Title Association, what our complete motto is advocate, connect, and educate. We need to educate homeowners, property owners, and those are our stakeholders. As experts in this field and as an insurance commission, I don't think we need to look at the problems of the title insurance industry. We need to look at the problems of homeowners.
And can you share with us the problems that you're seeing with title searching that is, you think that is reckless, or maybe someone hasn't been trained appropriately, or as you were saying, the overseas issues? Can you just share those with us? Because I mean, I feel like I've been talking to you about it for a while.
Yeah.
Maybe other people up here have not, learned or heard.
I think one of the largest issues is building and zoning permits, open permits. When you're purchasing a home, we all want to know if there's a dispute going on, and I could attest when I purchased my home, for an example, the gas line went through the neighbor's property. The person who title searched, who did our home, they always say, if you're a builder, you don't build your own home. I should have, but the person who title searched didn't pick up the permit that already existed that the gas company needed to pull up. There was an open permit to pull up the gas line and move it. 3 weeks after we moved in, the gas company came to tear up our front lawn because building and zoning records cannot be checked online. In 169 towns, they cannot. So they're not being checked online. Sewer and water liens in many of our towns are not recorded on the land records. They're kept separate in sewer and water lien books. Those are not being checked. Fraudulent deed transfers. I recently had, and I think I talked to Representative Wood about this. I recently had a fraudulent deed sent to our office to be recorded by an attorney. And normally we go record the deed for the attorney. They send it with checks. When we got to the Easton Town Hall, we opened up the envelope and immediately as a title searcher, we recognized it was fraudulent. There was no 1-inch margin around, which is a requirement. You don't know that if you don't live in Connecticut and have been a title searcher. We need to leave an inch margin or a paralegal or an attorney. Number two, the conveyance tax that was paid was with money orders that had Sharpie, that were filled out with a Sharpie and $66 in cash. So I knew that it did not come from an attorney's office. The attorney's office, it came from, the phone number was disconnected. We did not do the title search at the company I own. I own a company called Fusion Title Search. The property was an over $1 million property. It was being sold from a company to a company for $212,000. Immediately, and it was signed by a notary public. And in Connecticut, we have to have a licensed attorney do a closing. We have to have a licensed realtor who is selling their home. So these instances have created liability that I think is going to be worse than what we saw in 2008 with the mortgage industry, where the mortgage industry was giving no income, no verification mortgages, but there was some sort of regulation around that. Right now, title insurance companies are issuing title policies based on title searches that are coming from online, unregulated, uneducated people in this industry in other countries and states. It is imperative that this be changed, in my opinion.
Thank you for that. Representative Meskers.
So I guess in the form of a question, we'll start with, so the problems you're seeing ultimately are resting more exclusively with the purchaser of the property versus the bank who may be financing the property, because I've not heard complaints from the financial industry yet. So I guess the cost is borne mostly by the person who's the buyer.
Yeah, well, I don't think so, because when the title searcher is doing a purchase, we go back 40 years and we're doing it for the homeowner. That is the reason we're doing it. However, they're being issued a lender's policy that they pay for, which only covers the mortgage company, not the homeowner. They can choose to pay for another policy, but we all hate. I love the insurance commission, but we all hate to pay for insurance. So they typically don't do it. On a refinance, we are doing the title search for the bank, because the bank wants to know what liens are on that property for their interest. So I see it in both avenues. And now with the new national federal program that's just been passed, they are looking to do away with refinancing of title policies. Wow. If a title searcher, and I have $1 million E&O insurance, I'm responsible if there's an error. How can an out of state or out of the country title searcher be responsible to the homeowner in our state?
Well, more importantly, I think the question is, how do you make them, how can you assure that you'll get paid if there's a dispute and the title searcher's overseas?
That's true. You don't know.
You may
A
not be
lot
able
of
to
people
enforce.
require the $1 million E&O, but we don't even know where that E&O insurance is coming from. If, and I have hired people from India to do a large research on this process. I hired them to do the research on my property. Every single one of them got it wrong. Every 12 title searchers from India who did my title search on my property had incorrect information on it. And I think one of those gentlemen we asked to be on our last meeting from India, he came on and talked about working for title companies and so forth.
Okay, thank you very much. No further questions.
Representative Denning.
Thank you, Madam Chair. So you brought up another question. When of the 12 that had an error, was it the same error?
No,
How many different errors did they find?
4
Okay, So-
different discrepancies of title searches.
okay, so in Connecticut, there's a law that to close on a property, you need to have a lawyer. In the state that I spent most of my life in, Ohio, you didn't need to do that. So I was assuming that when you have a lawyer close your property, that he takes more culpability in making sure that that title search is done appropriately. Is that true, or do you know?
No, that's not true. Because I do searches for, I can't say that for all attorneys, because there are attorneys that do their own searches because there's no regulations. These searches that I do for attorneys, they trust our company because we are experienced, educated, we know the things. However, we type the commitment for those attorneys. So they are not even examining our title search because they know if there's a problem, the title searcher is getting sued. So there's a trickle down effect. The error comes in, they put a claim into a title insurance company. The title insurance company then, that is why there's 3% payout in title insurance companies. It's not because there's not errors. It's because the title insurance company then looks to the attorney and the title searcher to sue because their E&O is actually the one paying out, not the title insurance company.
And you're required to have what I would call malpractice or
You know,
insurance?
not by the state of Connecticut. I'm not required to have anything. My clients require that.
So how can you talk about not being able to get money from people out of state? How do I know I can get money from people in state?
You don't even know that because these individuals in India have addresses in the United States, all of them.
No, I'm talking about, for example, people who live here in Connecticut. How do I know that those companies that live here in Connecticut would actually be able to pay?
Because we should, I shouldn't say should, but the better way to do things is to require $1 million E&O insurance. If I do a house that's over $1 million, I get an exception from my E&O insurance. But if we actually regulate it, that it could be a requirement of every licensed certified title searcher to carry now E&O insurance, errors and omissions insurance. And the sad thing is that the community that we serve, and I love Connecticut, I think we do a wonderful job in regulations. We have so many regulations and rules in Connecticut, but so I really think we're doing an injustice because we're not servicing, our job is to service homeowners, especially in a housing crisis. And we're just not doing that. And a lot of it is about money. It really is because in India, they pay $10 for a title search. 25 years ago, I got paid 20% more than I do for a title search today. It's the only industry that has declined in income and has put, I'd say probably 300-400 title searchers out of work completely, quit.
Thank you very much for clarifying things I need to learn more about. Thank you, Madam Chair.
Representative Pavlik Tomato.
Thank you. And thank you. I heard the part of your testimony. But the title company, I was a little confused by this bill because the title companies, like you said, going to get sued if there's an issue with title. So it'd behoove them to, I guess, train whoever's actually doing the search or make sure it's done properly, right? So I'm not sure what the incentive is for them not to train people properly or make sure that the job is getting done properly if they issue a title policy and then they get sued.
Yes, but remember, they don't issue, they issue a title policy. All mortgage companies issue lenders title policies that only protect the mortgage company. The owner's title policy is separate.
Right.
That protects the owner. So you would think, but in the title insurance commission, in their minds, I believe that they're saying, well, there's only 3% payout. Because really, what is our issue when we're going to go to the title searcher? And if they are requiring E&O, then they have that policy, that E&O policy, they put the title searcher on risk. Even in India, the 12 men that I hired in India all had E&O insurance from the United States. They all had addresses in the United States. They all have bank accounts in the United States.
But they're working for the title company. So, they're an employee or 1099 or whatever. So it still goes back to the title company.
They're
So-
all 1099 contractors. So they do not, very few title companies employ, they used to. Caddick, I love Caddick. They used to have their own employees that were title searchers.
Right.
But due to the economy, the decline in this industry and the lack of regulations, title searchers are no longer employed by attorneys, title companies. They're 1099 contractors that are recklessly given a 1099 at the end of the year,
Well, no
never
matter,
going to the office.
but no matter what that arrangement is, that I don't know. Let's say hypothetically, that doesn't matter to me because I'm hiring the title company. So, and ultimately they're issuing the title policy. And I get what you said about, well, there's only a 3% payout. So for them, it's worth the risk, right? I guess that's their
Money.
reasoning. And actually a couple of people have, when I told them about the conversation or the meeting that happened, I think a few weeks ago, they assured me that the person wasn't from out of the country. But again, to me, I don't know if that necessarily makes a difference because ultimately the company is the one who's responsible. And title companies, at least the ones I've dealt with, they make us have E&O insurance as attorneys. So we have to have that. I was wondering, can you give examples of those errors you mentioned? You had mentioned can you tell me a little bit more about those errors?
The building and
specifically, yeah.
zoning error, which was
The what?
the building and zoning error of the gas line, that permit is still open.
Okay. So
We
there was an
also,
open permit.
yes, we also have a permit open. You need to be a licensed pool installer. So we have a permit open because we haven't had our pool inspected
Yep.
yet. That was number 2. There was a Liz Pendens that was on record that was missed because 2 of the searchers I spoke to didn't understand that a Liz Pendens is telling the searcher something is going on in the judicial
Right.
courts. So as a title searcher, I then need to go and search the judicial
Court
court
records.
system, right? They didn't pick up that at all. 2 of them did not pick up the Liz Pendens because they don't know the rules and regulations of the state of Connecticut.
Well, I'm surprised they wouldn't at least put it down and say, caution, Erica, this is attached to the property. I'm not sure what it is, but it's definitely attached to this address because I would think that the title company would make sure that anything, attached to that address, even if you're not sure, at least list it and, put it in the report and make sure it's
Yeah, no,
someone's
that,
aware of it. So what was the other one? You said there was one more, I
oh,
think.
a Liz Pendens against the
Yeah.
property and a mortgage that had been misspelled in my husband's name was not picked up by all title searchers.
So they missed it because of the incorrect
Misspelled.
spelling of your husband's name. Now that has happened to me. I have a client with a very difficult last name. And for that reason, I go down to the town hall itself to look, and it's always misspelled everywhere. But that's a good point too, is that clerks, I still have to go down physically, right? Look it up online and then go to the book, the physical book. And I was taught physically to do my searches, right, 40 years back and match up pages back to back as far as the seller and buyer and transferor.
Yeah.
But I don't know if I'm going online still if I have to use the online system of the town hall there, I could still miss it because it's still entered in improperly by the clerk. So I don't know if I'm gonna be able to find the book and the volume if it's not in their system at the town clerk's office. So I'm not sure if that problem is solved.
It is because as a title searcher, when I title search, if the name is difficult, I put in the first 3 letters of the last name.
And just do that.
And I search, I look at every single document. And when you're talking a last name of Bay, for instance, that is a sovereign citizen, there are over 500 records that will be recorded on the land records that need to be really looked at. And currently, that's the difference between a title searcher, title examiner, and title abstractor. So a title searcher just used to, when they did a title abstract 50 years ago, even 40 years ago, would get everything on the land records, released or not, would get everything. Then as technology moved forward and as modern governments moved forward, we then changed things to give the preponderance of evidence, I should say, the due process onto the title searcher, who now eliminates the released documents. The title examiner's job is to examine the laws and regulations of the duration of liens, for an example, 20 years for specific liens, 10 years, federal tax liens. Federal tax liens are the only lien in this country that follows people, not addresses. So there will never be a proper address or a legal description recorded on the land records with a federal lien. So a misspelling in the name would be dramatic problems there in a federal tax lien, which in today's world, that I see them almost in every property. And that's a large thing. If you're not a searcher if you're not even an attorney or a title searcher or paralegal, or many people, they don't know that federal liens don't follow property. They follow people. And that's another law and regulation. There's a state, there's Ohio, for an example. You were from Ohio, right? Ohio, you have to do a title search under an attorney because it is considered practice of law. So where is that blurred line? Is it practice of law when you're deciphering legal documents? Possibly.
Well, I have to say, in this state, seems like everybody's practicing law. I mean, you can go to a department, they're free to give out advice, and then when they're wrong, doesn't matter. Doesn't matter. So it's a common issue here, whether you go to the clerk, the court, a regular state department. It is, look at the forms. You go look online at the courthouse. The number of forms, I just never, they don't provide that in Florida. And it's not because they don't want people to be able to access the courts, but it creates a lot of issues. You then naturally have a clerk who basically has to give legal advice.
Right,
because somebody's
exactly. And the
always asking,
docket,
and
the docket's online now. So
yeah, which is fine. I think that's fine. But there's so many self-help forms that don't even some of them don't even conform to law. But there's other ones that again, it's just it creates these issues. And they've just gotten out of control, and that's in again across many fields. And I don't mean to go on a tangent, but
are you're like me, because even with technology, as we grow, we had a cyber attack, and we don't. Let me be clear that 169 towns don't house their own land records.
Right.
We use third-party vendors. I love the term third-party vendor. Everybody wants to hire a third-party vendor. So when that third-party vendor got cyber attacked, our land records were down for a month. I could title search because I don't need I title searched during Hurricane Sandy because we don't need electricity. We don't need anything to title search. But people were in such awe over the fact they couldn't title search that closings weren't happening because of a cyber attack on our land records. Closings weren't happening. Foreclosures are a huge problem in this area, huge problem, because we have a foreclosure process in Connecticut that's very different from county-based New York or so if you're a title searcher and there's a foreclosure, and especially if the house is owned by a company, I need to go to the state level. UCCs are done at the state level. They're done at a level that you just can't search online. I have 14 title searchers that do not search online. We search grantee, grantor books. We utilize the online land records as a convenience because it should be, makes our job easier. I love it. But to do a proper title search with zero regulation. And when that legal problem happened a couple of weeks ago with the recordation, I called the US attorney. I wanted it out of my office. She said, well, just call the people that regulate it. I said, there's nobody to call. I called the Connecticut Bar. I'm a member of the Connecticut Bar Real Property Section. Well, what are we going to do with it? Is there title insurance? Well, I don't know. It's just a deed.
Right.
The attorney was in prison. The attorney who was on the deed was in prison for a $3 million fraud from 2 years ago. He still is incarcerated in prison. So it was astounding to me that I had nobody to go to. I called the local Branford Police Department where I lived. They told me it was a civil matter. I said, I don't care what you do with this. Come get it out of my office. I want a police report on it. I'd be happy to share it with you all. They did take it. I have no idea if they even brought it to the US Attorney's Office. It's unfortunate.
Yeah.
And I think we do all agree that we need to look at this reckless industry right now when a homeowner does not know who's conducting anything that has to do with a possible liability on their home. It's reckless.
Right.
Period. And a title searcher's name will never be on a settlement statement, ever.
I appreciate it. Thank you.
Thank you.
Representative Delnicki.
Thank you, Madam Chair. And I'm probably learning more about title searches than I ever wanted to know. But I also realize just how critical it can be if it's not done properly. And basically, you're looking for like check every box, everything is done here. People actually have to go and access documents to verify. And I think of like in the greater Hartford area as an example. You could very well have a water or sewer lien based on the installation of a pipeline to your home by the Metropolitan District. And it may only show up in their books and on their property card versus if you were to go to the town hall and take a look at the documents there, it might not show. Is that a fair comment?
Most municipal liens, except the sewer and water, depending on the town, every town does it independently and differently. Often you won't see it if it's in a separate sewer and water lien book. That's something that would not see. And encumbrances, easements are often not recorded. They are recorded on the indexes, but you can't see them because they're so old. You can't see the document. It is crucial to see the document. If I purchase a house, I want to know if the electric company can put a light pole on my front lawn. And if you're not searching for those things, could happen in any point in time after purchasing a home. And without a owner's policy, you are left in the dark because your mortgage insurance, your homeowner's insurance, and a lender's policy will not cover something like that.
And this is more a rhetorical question, but feel free to answer it anyway. How can it be done offshore?
I'd like to say it can't be, but it is done because of online records, and all that is being searched is what's available online.
So basically, we're becoming so dependent on GIS and electronic data. And I know you made the comment pertaining to a cyber attack. But even with, for lack of a better term, first generation documents electronically stored, if you don't have the ability to access them properly, you can't do a proper search. Is that pretty
That is
accurate?
absolutely correct. I mean, our land records go back to the 1800s. I mean, I've done searches, for an example, for Yale. We're doing searches now for charging stations. Those charging stations are just land that we need to do searches on, cell tower searches, commercial searches. Commercial searches cannot be done online because of the UCC, Universal Commercial Code, that is recorded at the state level. And a lot of people you will find today hold title and trusts on companies, and those companies need to be also searched through the Secretary of State's office of who owns those companies. And now those owners need to be double checked on the land records, because with a limited liability company, it is just that, limited liability. You don't know what reality is going to cover and something like that.
Well, I thank you for the answers there, and you highlight the issue
Thank
very
you.
succinctly, and I appreciate your commentary.
Thank you so much, and especially Representative Wood for actually
Thank you,
bringing
Madam
this
Chair.
to light. Thank you.
Thank you very much, Jacqueline. Next up, we have Joanne Breen.
Good morning, and thank you to the committee for allowing me to provide testimony today. I am Joanne Breen. I am a past president of Connecticut Realtors, representing nearly 19,000 members involved in real estate transactions throughout the state of Connecticut. You have our written testimony, so I'll try to summarize our support of HB 5461, an act concerning wholesaling residential properties. In a wholesale transaction, the seller and the wholesaler enter into an agreement for the purpose of selling, assigning, or transferring a future interest in the property to a third party. The wholesaler agrees to pay the seller a certain price, and any amount paid by the third party buyer above that goes to the wholesaler as profit. Sellers interested in wholesaling their property often have distressed properties, or they're experiencing financial hardship. Very often they're disabled or elderly individuals who are desperate for immediate cash. Control of the transaction is not in the hands of the seller, but it's rather in the hands of the wholesaler, who may not have the same sense of urgency that the seller has. In the meantime, the seller continues to pay for their mortgage, tax, insurance, and maintenance costs on the property. Connecticut Realtors believes consumer protections must be added to the process so that the consumer is aware of the actual market value of their house when agreeing to a price that is usually substantially under what the market will bear, and also understands there is no closing until the third-party buyer is found and closes. This legislation would ensure disclosure that the real estate wholesaler is not purchasing the property, rather being given the right to assign the property for profit. Disclosure that the wholesaler does not represent the seller or the seller's financial interests, and disclosure as to whether the wholesaler is a real estate licensee, and if so, whom the licensee represents. In addition, the proposal would require the wholesaler to provide to the prospective purchaser any lead paint or property disclosures already provided by the seller as required in a conventional real estate transaction, and require the wholesaler agreement with the seller terminate no later than 6 months after the date of execution. Additionally, as you'll see in our testimony, Connecticut Real Estate is recommending a change to our original language as drafted regarding sellers aged 65 or older, and the time frame during which they can terminate the wholesaler agreement without cause. Our intent here is to provide guidance to wholesalers and protection for the consumers who hire them. In conclusion, Connecticut Realtors believes HB 5461 is a strong consumer protection bill, and we're asking for your support, and thank you for your attention to this matter.
Thank you for joining us, Joanne, and thank you to the Connecticut Realtors and other groups that have brought this to our attention. Can you just explain to us what's happening in Connecticut regarding wholesaling and, why there's a target towards seniors?
I got a phone call last night, and it was a wholesaler. My husband and I are both over 65, so we're a perfect target. The person called up and said, I'm calling you about selling your property over on, I don't even remember what the name of the street was, but it wasn't my street. And I said, well, I don't own any property on that street. I said, are you a realtor? And the person on the other end said, no, I'm not. But it's okay if you don't own that property. We're interested in talking to you about the property you do own. Do you own the property you're in? And so at that point, I probably should have kept it going to hear what the answers were. But I was in the middle of a lot of things and I said, look, I'm a real estate broker, and they hung up on me. So that was the end of that. So that's the approach that a lot of people get. So what we're hearing at Connecticut Realtors is we're getting calls from consumers that think we can help them. I mean, really all we do is handle ethics within our own industry. But we do try to provide some guidance when we get calls like that. We've gotten calls from elderly individuals, disabled individuals. They've gotten tied up in these wholesale agreements with very long terms in the agreement that they're stuck with. They expected a fast closing and fast cash, and that's not what's happening, and they don't know how to get out of it. So we're concerned about that. We're also concerned about our members to make sure that if they're involved in wholesaling, that they're disclosing things properly to the prospective or to the seller, so that the seller understands that that person is not working on their behalf as a fiduciary in that situation.
So it sounds like your concern is, they call someone and someone is under the impression that, I'm having a difficult time paying my bills, paying my property taxes. I'm going to get, this house sold really quick. It sounds like what you're saying is these are getting tied up for longer periods, and that need to continue paying is causing people, stress. And that's why they're reaching out to you, because they thought, hey, this house was going to sell. I was under the impression that this was going to move faster.
I think that is the way the approach is, that it's going to be a faster, quicker sale. Very often wholesalers have a list of investors they're working with who are interested in buying properties like this. So they may expect, in all honesty, they may expect that they're going to dispose of the property quickly, but it just may not be happening. And I think the other problem is that some sellers are not clear that they're not working with a real estate licensee, and that person isn't working for them, and that this isn't a conventional real estate transaction. And many times the other concern is they're not aware, they have no idea what the real value of their home is, because it's not a conventional transaction. There probably isn't a market analysis being done in advance of all of this starting. So they go into it being told, look, I'm going to give you this for your house, but they don't realize that if it went on the open market, they may do considerably better. The wholesaler, they're looking to make a profit.
How long have some of these wholesaling contracts been?
I've heard of some going as long as a year.
Okay.
Yeah.
And so the change that you're asking in this bill is to have an out for people 65 years of age and older?
Yes, and what our original language stated that anyone 65 or older would have an out without cause. But we realized we really needed to put a reasonable time frame in there. So the additional language we've added in is that they can get out without cause up until such time as the property goes under contract with a third-party buyer. Because to interfere with that buyer's purchase of the property, we didn't feel was justified.
So if you enter into a wholesale agreement, are you getting cash up front?
It's done many different ways. There is a deposit up front. My understanding, I've never done a wholesaling agreement, but my understanding is that the deposit could be something significant, or something is, $10,000, could be $50,000. Sometimes I've heard that it's a non-refundable. So I think that's what attracts people that are in need of immediate cash. Look, I'm being guaranteed this up front no matter what. And then when it closes, I'll get the rest of what the wholesaler agreed to pay me. The wholesaler gets everything over and above that. So, there is some risk for the wholesaler, certainly not looking. And I imagine there are situations where this might suit a seller. This might be what they want to do. We're not looking to outlaw wholesaling. We're looking to put some regulations in for the benefit of the consumer and the wholesaler.
So, do we also need to think about if someone 65 years of older was given $50,000, spent it, then canceled their contract?
Yeah, well, the language also does allow for if they cancel without cause, then they would have to return the deposit. And do it with written notice. So that's
Okay.
been added in the language. Thank you for bringing that up.
Yep. Can I just also ask, you were here during the title search regulation discussion. I was wondering if you could comment on, that from the Realtor's perspective, if you.
Yeah,
if
I
you'd
learned,
like
I
to.
learned a lot today too, so I was happy that I was sitting in the room. It's certainly something, we haven't had a chance to discuss it, but it's certainly a conversation we'd like to be a part of. Sure.
Great, thank you. Any other questions? Representative Delnicki?
Thank you, Madam Chair. And there's a subtle irony here today on what you're testifying to. Yesterday I went out, I got the mail, and lo and behold, there's a check in there. And it's for some substantial sum of money, not exactly what the property is worth. And I'm saying to myself, you got to be kidding me. And the fine print, by tendering the check, I enter into an agreement. I shredded it as soon as I got done reading it. And I'm wondering, is something like that related to what we're talking about here?
Yeah, from what I heard, and my own experience, that seems to be one of the approaches that wholesalers will, it's a marketing piece that attracts interest from someone who, as I said, especially if you have financial need or you have a distressed property, some situation where the other problem is we're hearing that cases that have called into Connecticut Realtors, the property is on the verge of foreclosure sometimes. So that adds another layer of complication when they enter into a wholesaling agreement, because that is not necessarily going to satisfy what the bank's looking for, and that creates another problem. So, I have not, like I said, I've not done any wholesaling in my career. Don't intend to, but these are the things that we're hearing about, yes. So that's one approach that they use. They'll do mailings like that and cold calling, as I got last night.
And in your opinion, the legislation we have before us now, would that address that area of concern, or would it require additional language? Because
As
I
far as
look
the
at that and
marketing is,
I look at that whole scenario and I get that probably once or twice a month. I'll get some kind of a tendered offer. And, typically I shred them as quickly as I get them, but I can see where somebody could actually fall for that. And in your opinion, does this language here actually cover that?
I think the requirement to disclose that this property is being wholesaled so that the wholesaler's intention is to make a profit on the ultimate sale. I think those kinds of disclosures are what we don't have and what we need. Sellers need to understand that they will likely be selling the property at a price considerably lower than what the market may actually bear, because otherwise there wouldn't be any reason for the wholesaler to want to do this. They want to make a profit.
So I guess the moral of the story here is you should be dealing with a realtor.
Well, I'd love to say that. It might sound
Well, I
self-serving.
can say.
But I will take that. from
Thank you
you,
for your
Representative Delmecki. Gladly.
Representative Pavlik Tomato.
Thank you. So you brought up a point that I have to say, let's say the couple is potentially getting cash up front. So, I would think that would be a reason, why they might need the money, right? Which is why this transaction or type of transaction suits their needs. So for that reason, I'm not sure why a wholesaler would hold on to it longer, because they've essentially fronted the money to them. So wouldn't they, want their money back and then some? So why then would a wholesaler not try to, offload the property as soon as possible? I'm not sure what benefit they get
And
by.
you're right about that. I'm sure that their intention is to unload it quickly because they make their profit and move on. many of these transactions do happen very, very quickly because again, some wholesalers are really very sophisticated in this business. The more I'm reading about it and finding out about it, they have a list of investors all ready to go. And in that case, it could work out well for the seller if it does move quickly. The problem is that anybody can get involved in wholesaling. It almost sounds like the title search issue. Anyone can get involved in wholesaling. They may not be somebody who is ready to really perform on this property the way a sophisticated wholesaler would be. And we have had cases where people have called saying it's been months and I don't know how to get out of this deal. And it's not closing anytime soon. If the seller doesn't put if the wholesaler doesn't put the right market price on the property, it's not priced well, even in this market, it's going to sit. So if they run into that situation with, I would think an unsophisticated or less experienced wholesaler, they can really get caught up.
But the same thing could happen with a realtor in the essence of.
It could, but the difference with the realtor is the realtor, number one, is working in the best interest of that client. When the real estate listing agreement is up, the client moves on. The client also has complete control over the pricing. So the seller in that case has total control of me. They can say, Joanne, I don't like the price you put on the house. It's not moving. Let's drop it. In a wholesaling situation, that's not the case. The wholesaler controls the
Right.
asking price.
Right. So I think it's careful the way we term it because, well, the wholesaler is looking to make a profit. Well,
Mhm.
yeah, so is the seller, so is the realtor, in those cases, right? So, I mean, that's not the
But
worst
we're
thing.
looking to make a profit for the seller. We get paid a service fee for
Well,
doing that
percentage,
work.
a percentage, right? So the
Well,
higher
could
the
be flat, could
sale,
be percent, yeah.
right, the higher the sale amount, the
Yeah.
higher a realtor gets. Yeah, so I can't, that part I understand. It's like with every contract, you have to read the contract, right? Don't enter into the contract
Mhm.
if you don't want to be held in it for a year. If it says a year, well, then it's not the contract for you.
Right.
If anybody has a sample, I haven't seen one, so I would like to see one. If you ever get your hands on one, I'd like to see that language
we-
specifically.
You can't, yeah,
Oh.
we've had members of our legislative committee that have seen them, but they haven't gotten their hands on them.
I'll try to get one too.
And I may be able to there's an attorney who spoke to me about this, a real estate closing attorney. He's very concerned about this because he's had clients that have been harmed by this type of transaction. And I'm going to be seeing him later today. I'll ask him if he has a sample.
Yeah, I appreciate that.
Mhm.
The only part that I disagree with is I don't like the carve out, although I understand it, the 65 and older. Only because this is a real estate contract and it seems to affect people the same way. So to make a carve out for 65 and older, that's the part I don't really agree with. And I understand the why. I
Yeah,
get it,
yeah.
right? But at the same time, if it's not let's say a good type of process or contract that we want to have, then it really should apply to everybody. So I don't think that a carve out like that is something I would support, but definitely it's hard for me to comment without actually seeing one.
Mhm.
So I think that's a pretty big part of this that we really need to see before making a determination, but I do appreciate your testimony. So
Thank you. And I think the reason we put it in there, I know the reason we put it in there, and you know the why, but
Yeah.
65 and older is specifically targeted as the type of consumer who seems to be going along with this type of transaction. And doesn't understand it fully.
Yeah, thank you very much.
Okay.
Representative Denny.
Thank you, Madam Chair. Quickly, I understand you want to add that the property needs to be appraised for its proper value.
Not appraised, but there needs to be a disclosure that the property may be worth more than
Just to say that it may be worth more
what
than
the
the
seller
contract.
is being
Okay,
paid
it's
by
not
the
a specific
wholesaler.
amount.
Right.
Okay. Thank you. Thank you, Madam Chair.
Thank you, Joanne.
Thank you.
Next up, we have TJ Clark.
Good morning, everyone. Can you hear me?
Yes.
Okay, thank you very much. Representative Wood and the esteemed members of the Insurance and Real Estate Committee. My name is TJ Clark II, and I serve as the Executive Director of the Connecticut Oral Health Initiative located in Hartford, Connecticut, where our mission is to strengthen and safeguard access to quality, affordable health services for all Connecticut residents. Our goal is for all residents to have equal opportunity to obtain services needed to maintain good oral health. COHI is the only nonprofit organization in Connecticut that solely dedicates its time to advocating for equitable oral health policies. Today, I want to say thank you for affording me the opportunity to testify in support of raised House Bill 5251, an act concerning insurance. I'm grateful for this opportunity to speak on this critical importance of prioritizing equitable dental care, highlighting the pressing need to treat oral health with the same gravity as overall health. It is imperative to advocate for equal treatment between dental and health insurance, recognizing that oral health is a vital component of overall well-being that must not be marginalized in insurance policies. Amending House Bill 5251 to include medical loss ratio for dental loss within it holds the promise of significantly increasing access to dental care for individuals across our state by potentially reducing premiums or stipulating a higher percentage of current premiums towards patient care. This legislative initiative can make dental insurance more accessible to a broader spectrum of individuals and small businesses. This enhanced access not only improves oral health outcomes, but also contributes to the overall public health landscape of our communities. Furthermore, an enactment of an MLR bill could serve as a catalyst for promoting preventative care and comprehensive treatment strategies within the realm of dental care. By ensuring that a substantial portion of premium funds is directed towards patient care, we have a prime opportunity to encourage a system where patients encounter reduced out-of-pocket expenses, thus incentivizing them to seek vital preventative services and adhere to recommended treatment plans. This proactive approach not only enhances individual oral health, but also plays a pivotal role in alleviating the financial burden associated with extensive dental procedures, ultimately enhancing the well-being of our residents. In conclusion, by advocating for an improved and equitable healthcare system that includes dental care and supporting the enactment of an MLR in this bill for dental, we are not only advancing fairness and accessibility, but also prioritizing the holistic health and prosperity of our communities. Let us stand united in our commitment to comprehensive healthcare that encompasses both physical and oral well-being, acknowledging that a healthy mouth is inseparable from a healthy body. Thank you very much for the opportunity to speak before you today.
Thank you, TJ. Any questions? Representative Delnicki.
Yeah, one very simple question here. You're basically looking for parity. Is that correct?
That's correct.
Thank you, Madam Chair.
Senator Lesser.
Thank you, Madam Chair. Thank you, Mr. Clark, for your testimony. Have any other states done this? I think that Massachusetts might have done something like this.
Yes, Massachusetts is the latest state to do this, but I believe that if you would answer those questions, have those questions ready for the State Dental Association, they could be able to tell you if other states have done so.
Okay, I will ask them. Thank you very much.
You're welcome.
Thank you, TJ. Next up, we have Michael Safian.
Good morning. Madam Chair, Mr. Chairman, members of the Insurance and Real Estate Committee, I'm Dr. Michael Safian. I'm a board certified oral and maxillofacial surgeon and currently the president of the Connecticut State Dental Association. My full qualifications will be detailed in my written statement. I rise to speak to House Bill 5251, and I respectfully request that House Bill 5251 be amended to include the CSDA's full draft legislation on medical loss ratio in dental insurance. a copy of which will be included in my written statement. As I see it, instituting a minimum MLR requirement for dental insurance, and the CSDA believes that an 85% threshold consistent with medical loss ratio, medical insurance, and the Affordable Care Act would benefit the public via improved dental, whole body health greatly. And there are 7 parts that an 85% MLR in dentistry will address. First, transparency and accountability. Implementing an 85% MLR requirement ensures transparency in how dental insurance premiums are used. It holds insurers accountable for spending a significant portion of the premium revenue on patient care rather than administrative expenses, profits, or exorbitant executive salaries. 2, patient-centered care. By mandating that 85% of premiums to be spent on dental care claims and quality improvement efforts, patients are more likely to receive the care they need. This ensures that patients are the primary beneficiaries of the insurance they spend their hard-earned money to purchase. 3, affordability. An MLR of 85% for dentistry means that more premium dollars are directly invested in patient care, leading to more affordable dental insurance premiums for consumers. And this especially is beneficial for individuals and families who may struggle with the cost of their dental care. 4, quality improvement. With a focus on meeting an 85% MLR threshold, insurers will invest more in quality improvement initiatives such as preventative care programs, patient education, and provider networks. This can lead to improved oral health outcomes for all patients and a higher standard of care within the dental industry. Consumer protection. Implementing an MLR requirement of 85% provides a safeguard for consumers against excessive profiteering for insurers. It ensures that insurers prioritize the needs of patients and maintain a fair balance between providing quality care and running a sustainable business. 6, public health impact. Access to affordable care, dental care is essential for maintaining overall health and well-being, and by ensuring that 85% of premiums are spent on patient care, an MLR requirement can contribute to improving the oral health of the population and reducing the prevalence of preventable dental disease and costly emergency room visits. 7, and finally, alignment with healthcare trends. An MLR requirement of 85% is already established in other sectors of healthcare insurance, such as medical insurance via the Affordable Care Act. Extending this requirement to dental insurance aligns with broader healthcare policy goals and ensures consistency in regulatory standards. If you want to see how your constituents feel about MLR, look to our neighboring state to the north in Massachusetts, where their ballot measure passed with over 70% approval and is moving through legislature with a bipartisan bill that is well supported on both sides of the aisle to create a medical loss ratio for dental insurance in Massachusetts. Thank you for your time. I'm happy to answer any questions.
Yes, Senator Luskin.
Yes, thank you very much. Thank you for your testimony. I will ask, I think you answered the question that I asked of Mr. Clark a minute ago, saying that Massachusetts has done this. What's been their experience there since the measure was adopted?
It's too early to say because it's just finally getting through the regulatory processes. So we haven't seen a final result, and it's too early to give any metrics back on it.
So you're looking for an 85% MLR, so that 85 cents on the dollar that people pay in their dental insurance premiums go towards care. What's the cap now? How much goes to care, and is there a requirement under existing regs?
There is no requirement at all. In some cases, it can be as little as 15 to 20% of those dollars of the dollars that are being paid in as premiums are going back to the patients in any form of care.
15%?
As low as, yeah. That's the low end, but nowhere near 85% at this point. I don't have exact numbers handy for you. There'll be another speaker later representing the ADA. He may be able to give those numbers a little more clearly.
If that number is accurate, that's pretty shocking. It doesn't seem like insurance to me, but appreciate the testimony and appreciate the committee's time.
Thank you. That's why we're advocating for this, because it isn't insurance.
Thank you for your questions, Senator Lesser. Anyone else have any questions? Thank you for your time and for your testimony.
Thank you very much.
Thank you. Next up, we have Alexa Pulverari. Sorry if I mispronounced your name. I guess everyone's noticed that Representative Carey had to leave. She asked me to run the hearing, so this is my first time. If I do anything wrong, please let me know. And all right, very good.
Point of order, Mr. Chairman. You're doing a great job.
Thank you. Thank you. Yes, you have to press the button. Yes.
Hi, everyone. How are you? So first off, I am a title searcher. I've been title searching for over 10 years. I was trained properly. So I was trained through grantor grantee books, and the old way of searching and not just by computers. As a younger generation, everyone assumes we always just go to technology and aren't taught the old and proper ways to do things. However, I was taught the proper way. Before I get into title searching, I did want to say that as a title searcher, I do back the real estate agents with their wholesaling issue. We get calls numerous times a day, asking for assignments of contracts, working with wholesalers. This is going to be a big issue, and it's going to continue to be a big issue. So we do want to, I mean, as a title searcher, I completely 100% back them as far as that goes. As far as title searching goes, our industry is becoming extremely reckless. There are 13 states that are currently licensed and or certified that require an examination. And then every title search will have a seal as like a notary seal. When you stamp after you're finished, they have a seal to do so. Kansas in 2021 passed theirs. There's also numerous other states that are going into the legislature to have their title searchers licensed, because every state is different and every state has their own way of doing things, such as like title plants are county-based, we are town-based. And we have different ways that we need to, such as tax lien, sewer lien books, stuff like that, that are not being recognized online. So when you're putting that title policy together, those liens are being missed. Those liens are not being paid, they're not on the commitment, and it's going to be an issue. As far as personally, I bought a house in Madison. My first house, I was so excited. I bought my first house in Madison. I didn't feel it was appropriate for me to do the title search or anybody that I knew to do the title search. So I went through an attorney, the title search was done. Great, we closed, it was wonderful. Unfortunately, I had an incident, we sold the next year, where I found out a municipal search was never done on the property, and there was a septic tank issue, and it was in a violation, and they had pumped it out before we moved in, but I was never notified. So I had to pay out on that sale for that septic tank, and septic tanks are not cheap. So that is an issue that I had to deal with as a home buyer, as a consumer in the state of Connecticut. Now, if my title search had been done properly and the municipal was done and building permits were searched and violations were searched, then I would have been educated enough to make my decision. And I felt like I wasn't. So as a consumer standpoint, I suffered. And as your insurance commission mentioned earlier, if there's nobody with qualifications completing this work, all your consumers are going to suffer. Your future home buyers, the next generation of home buyers, which is coming in, and unfortunately not a great market, but they don't know enough to do their due diligence. They're not educated enough to do this.
Your 3 minutes are up. If you could please summarize.
Thank you. So in summary, we need to be licensed or regulated before this gets completely out of hand. Questions?
No, thank you, Ms. excuse me again, Palvabari, for your testimony. Does anyone have any questions? Representative D'Amato.
Thank you for your testimony.
Yeah.
So what do you recommend? What do you think? What do you think about this bill? There's no problem as far as like you're concerned, but at least because you were trained properly, but as an industry as a whole, what do you think we should do?
I think that other states, so as when Jackie answered this question before, there are other states that have incredible methods. So what they're doing is you fill out an application as you would like a notary application per your state, and you have to be in that state as we state searched by standards of title in Connecticut. And you take an examination. No you need to know the basics of the standards of title. You need to know what you're doing. You can't just walk into a town hall and say, I did process of elimination, or I'm online doing it process of elimination. I'm not reading the documents where there could be mistakes in the indexes and anything like that. And after being, after taking the exam and paying, your fee for your license, you get a seal and you're regulated. If something goes wrong, then you're responsible. However, right now, somebody overseas is not responsible for anything. How could they be?
Right. I mean, there's just no way to like
regulate.
Right. And go after them. And although, you could say the same about, let's say somebody, I mean, at least now if you're with the company, right, you can go after the company. And again, there's that title insurance policy, but, I don't know if somebody's going after like the title searcher as an individual. I mean, again, an individual could have nothing. So, it's definitely, do you know specifically other states? I don't know if she mentioned certain states that.
Yeah. So there's, do you want me to list them all for you?
Just a couple.
So Nebraska, who calls theirs the Safeguard Act. They actually, which was great, they originally had theirs passed in the early 90s, late 80s. It came up in 2005 again, and some searchers were like, out-of-state searchers were questioning the licensing, so they brought it back for review and decided to again regulate and license searchers to safeguard the consumers and the home buyers of their state. They were nervous, especially with all the fraud that's going on, especially recently with land fraud in Fairfield. I'm not sure if you guys heard of what happened in Fairfield with the property. A person owned it, a man owned it, and another man from another country had the same name. They did a virtual closing, and that man sold the property right from under the actual person who owned that property. Now, there was a middle initial on the deed that was never brought up. If that was brought up on a title search and that middle initial was seen, the attorney and the paralegal would have been like, middle initials are important, that they should match up as well. So that's a fraud. And that was $1 million property sold right from under him. And now he's going through a legal battle trying to get his own property back when he owned it.
Yeah.
As a consumer, that's crazy. Imagine fighting for your property when you already own it and you've paid for it and you put your time and your love into it.
Yeah. I mean, I agree. And I think, I don't know if this would have solved that problem. And I have to say, middle initial or not, I am always shocked because I always find mistakes. And I think because it's, a lot of people treat it as volume work that, they won't look at the description, they won't look at other things. And I find mistakes a lot because I don't do that many. And so I middle initial or not, I don't know if that would have changed it or somebody would have caught it to stop that from happening. But I do appreciate your testimony. And I don't know if we're going to be able to put in the time to this that we really need to, but this session, but definitely, I think it's something that we're going to work on and look into more and look at other states and really craft some.
Yeah,
language
because
that's-
we did the research for the other states. We do have all that information. I just gave you a couple examples. I mean, I can tell you all of them if you want. But as far as these go, it's something that's pertinent, it's important, and hopefully maybe we could give you the reports and the research so you can take a look at it.
That would be great. I appreciate that.
Absolutely.
Thank you for your testimony.
Thank you so much. Any other questions?
Thank you, Representative. Anyone else have any questions? Just one quick question from me is, if you had made a mistake, what is your culpability and how would somebody hold you accountable?
Well, a title company or an attorney, if I make a mistake and they have to pay out, they turn around and they sue me
And how
for
do
what
you-
they had to pay out.
And how do we know that you could actually reimburse?
We have to prove E&O insurance.
Okay.
So you have to prove your E&O insurance certificate.
Okay, thank you very much.
Absolutely.
Thank
Thank you. Have a great day.
Our next person to testify is Mary Kate Conboy. Welcome.
Thank you. Good morning, members of the Insurance and Real Estate Committee. I speak in favor of an amendment to incorporate the Connecticut State Dental Association's medical loss ratio language into HB 5251. My name is Dr. Mary Kate Comboy. I'm a 2015 graduate of the University of Connecticut. And I've been practicing in New Haven, Connecticut, here in the state for about 9 years now. So if you were to step foot in any dental office in the state, there are two conversations that you're most likely going to hear. One is going to be conversations about life's successes, life's joys, and then also life's struggles. We see our patients at a minimum of every 6 months, oftentimes more than that. And if we're lucky, we're with our patients for their entire lifetime. We consider ourselves part of their family, and we consider that a privilege. But the second conversation you would most likely hear is about insurance. And those conversations are oftentimes emotional and they're difficult. And they're conversations that I have again and again on my daily 30 patients a day. And these are conversations not about what patients necessarily want, it's about what they need. And the conversation invariably turns to, why isn't my insurance covering this procedure? Why are they making me pay more and I'm being reimbursed less? Why do I have to choose between paying for a tooth that needs to be fixed or a new appliance? An 85% threshold for medical loss ratio allows our patients to afford high quality dental insurance. It's going to decrease their out-of-pocket expenses. With a greater portion of premiums designated for patient care, insurance providers will be more inclined to cover those preventative services and early treatments that are essential. The same rule that I tell my patients applies to their mouth applies to insurance companies. Early detection equals earlier treatment equals less invasive treatments and overall lower costs. Fix the problem now in its early stages before it becomes a less favorable outcome later. All we want for our patients is for them to be able to chew properly and to be able to smile confidently and to be able to have one less worry in their life and to be able to talk to their family members and to enjoy a meal without having to think about their teeth. MLR is one step that we can take toward helping our patients. So in closing, I urge this committee on behalf of all of my patients to support incorporating CSDA's medical loss ratio language into this bill, as it's going to allow patients to obtain the health, not only it's the health that they deserve. And I will take any questions.
Thank you, Dr. Comboy, for your testimony. And thank you for staying in the state after you finish dental school. We need more providers. Anybody have any questions? Seeing no questions, I appreciate your testimony and we'll take that into consideration.
Thank you.
Thank you. Next to testify is David Freed. Welcome.
Representative Denning and the rest of the members of the committee that have decided to stay with us this morning. I'm Dr. David Freed. I'm a practicing dentist here in Connecticut, retired Army National Guard over 35 years. I've been practicing dentistry here in Connecticut. I'm currently on the Council of Dental Practice at the ADA, and I chair the government affairs for the Connecticut State Dental Association. I have served as a past president for them. I'm here representing our 1,400 members. I rise today to speak for the inclusion of the CSDA's medical loss ratio language into HB 5251. This inclusion is pivotal in acknowledging the paramount importance of dental health on an equal footing with overall health, thereby promoting a more transparent and streamlined insurance sector. We are willing to work you to help our patients receive the benefits which they are already paying for. The MLR bill that the CSCA proposes to include has multiple components, and I will speak specifically on the transparency it will establish. MLR legislation would mandate that insurance companies publicly report the portion of premium dollars spent on patient care versus administrative expenses and profits. Right now, we don't know. We don't know what that number is here in Connecticut. The Affordable Care Act regulations require insurance carriers to be transparent in their expenses and spend 85% on patient care. That means that for every $100 they take in, they have to spend $85 on patient care. If that money is not spent, it's returned to the person who paid the premium. And I know for me, when I was a business owner, I received money back from insurance companies. My friends all did, because during the pandemic, nobody went to the doctor, nobody used their insurances. So that money really worked. It was on a 3-year look back. We're looking for the same with dental insurance. Estimates in California are that only 60% of the premiums are directed at patient care, and they've had some transparency laws already enacted. Nationwide, the estimates have been placed at 40 to 60%, and you heard Dr. Safian, I think, comment that it was as low as 15%. Mr. Chad Olson from the ADA will be going through some of the numbers specifically. Maine also passed some transparency, and it's estimated at around 40%, and they've been reporting for about 3 years. The other thing that happens is there's ways to hide and change the way that it's reported. There's one of the insurance companies, actually, their foundation spent more money in charity than they did on direct patient care. So that's also been a problem we've seen. The problem is this: no one knows what the number is in Connecticut, and this legislation will fix that. There may be some companies that conform, but the data from California and Maine are indicative. Most likely they are not even close. Transparency is important to ensure that our patients, your constituents, receive reasonable return on this monthly family expense. Transparency will also establish trust in the patient-provider relationship by clearly defining how premium dollars are spent. Patients will be assured that their investment in dental health care insurance is being used judiciously to support their health and well-being compared to insurance corporation overhead expense. Patients have the right to know how their premium dollars are spent, and legislation like this is the means to achieving it.
Your 3 minutes are up. If you could please summarize.
Sure. We're hoping that you'll be able to support this legislation. It is pro-consumer and saves money. Insurance companies have become too entitled to their profits over the last few years, and patients are paying for it. We will include the MLR language, which many members have already seen in our written testimonies. Thank you.
Thank you for your testimony. Are there any questions, Dr. Freed? Yes, Representative Pavel D'Amato.
Thank you. So is there, I'm not sure on the national level with like NCOIL and some other organizations, like what's happened there? Is there any recommended language that they've adopted?
Yeah, so NCOIL met, and that we're happy that they did. Mr. Olson can talk more about that specifically because he was involved with that. But that's the bottom. That's like, the absolute minimum standard. We can do better here in Connecticut. Massachusetts isn't better. But those are for states that haven't begun their conversations, and we've had those conversations with many people in the committee here and with consumers. It's a consumer bill. So that agreement is really just a basic bill, and Connecticut is a little bit more advanced than in many states.
So what did that national model, what did that look like? How was that different?
Can you just direct that question to Mr. Olson?
Yes,
when he
definitely. Thank
comes
you.
on?
Because I remember looking at it, but it's been several months, so I don't remember off the top of my head, but.
Mr. Olson was involved with that.
Okay.
That's why he's coming on.
And any other states that we can look at for, I think Massachusetts was one that was discussed.
There's a number of states that are doing it. Again, ask Mr. Olson. He knows the national data a little bit better than I do.
Thank you very much for your
All
testimony.
Okay, so
First of all, I want to thank you for your service.
Oh,
You made,
sure.
made mention of your retirement from the Guard.
Right.
Noble pursuit.
Thank you.
Um,
It was
secondly,
my honor.
basically, you're looking for parity. Is that?
Exactly. Equal with medical insurance. Just look at it the same.
Well, two very simple questions. Thank you.
All right. Thank you.
Thank you, Representative Delnicki. I appreciate that. Final question. You're understanding that when the Affordable Care Act came in and required the 85% care, that insurance rates skyrocketed. In the states that have already adopted the 85% rule, what has that done for dental insurance rates that you're aware of?
I'm not aware of any, I don't know. I don't have the answer to that. Maybe Mr. Olson does. I'm not privy to that information. We just know that if they increase the rate, then they still have to spend the money. If they increase premiums, they still have to spend money, more money then. So I don't see
That
how
or,
increase.
that or they can increase their 15% that they use for other things in their administrative costs, which is one of the things that insurance companies have been accused of doing. There's no real evidence to support all of this, but that is one of the claims that's being made.
Well, I know that insurance companies, it depends on where they want to put expense, whatever. So like they'll put advertising on the patient care side, where it's really not. That's not patient care. Patient care is, where the rubber meets the road. Somebody's getting their mouth healthy or their body healthy. And if they're spending it on advertising, calling advertising part of a patient expense, that's kind of wrong. And I know that's where some of the money gets shifted around.
Very good. Thank you for your
And if you have any more questions, I know Mr. Olson can probably answer those a little bit better.
He is up next.
Okay, perfect.
All right. Thank you very much.
Thank you very much.
And Dr. Olson, welcome. Yeah, I think you're mute. Are you muted? You might want to check. We can't hear you. We cannot hear you yet. Yes. You want to try to re-sign on and we will come back to you and see if you want to try is your mute off? There you are. You may be here now. Try it again. No. Okay, let's go on. Mike, you come back, Dr. Olson, if you'll sign back on and try to get that technical issue resolved, we'll be back. And Mr. Mike Byrne, if you'd please come and give your testimony. Welcome.
Thank you. I think we're still good morning to all the committee members. Appreciate your time today. My name is Michael Byrne, and I represent the United States Travel Insurance Association. The USTI's members include insurance carriers, third-party administrators, insurance agencies, and related businesses in the development, administration, and sale of travel insurance and travel assistance products. For the last 5 years, USTIA has worked on introducing the National Association of Insurance Commissioners Travel Insurance Model Act in Connecticut. The Model Act has been thoroughly vetted by all stakeholders to clarify an efficient, effective regulatory framework for travel insurance that benefits consumers, empowers regulators, and ensures the marketplace operates fairly on a national uniform basis. The Model Act standardizes definitions and contains consumer protections, including for sales practices, a free look refund period, and various consumer disclosures. Connecticut Insurance Department, along with nearly every other state, approved the Model Act with a commitment to support its enactment into law. So far, 35 states have enacted the Model Act with minimal deviations, including New Hampshire, Rhode Island, and Vermont. Another 9 states, including Massachusetts, New Jersey, New York, and Pennsylvania, are considering enacting the Model Act in this or their next legislative session. USTIA and others in the travel insurance industry, unfortunately, cannot support Senate Bill 398 as it appears before the committee today because it significantly deviates from the Model Act. An example is a provision that would deem the sale of every travel insurance policy to be an unfair or deceptive insurance practice unless the policy ultimately pays a claim. We appreciate this may not have been the intent of the drafter, but this is just one example of SB 398's many deviations from the Model Act that prevent us from supporting the bill, unfortunately. We hope to continue working to enact the Model Act in Connecticut. We attached a proposed replacement bill with our written testimony, and I'm happy to answer any questions. Appreciate the time.
Thank you for your testimony. Have any questions? Representative Pablo D'Amato.
Explain, I confused by what you said as far as it makes every policy what fraudulent, or I can't remember the term you used, if there's no claim put in. Can you explain that?
Right. So basically, and the way it's unfortunate, the way it's written, thank you for the question. Again, I don't think this was the intent, and this is an example of some of the other changes that I think made substantive deviations from the Model Act that maybe weren't intended. But the way the language reads, I'll read it to you. It says that offering or selling a policy of travel insurance in this state that is never required to pay a claim shall be deemed an unfair or deceptive insurance practice. So like if you have a life insurance policy, if you don't die before the policy terminates, that would be an unfair insurance practice. We're not talking about life insurance, but it's every policy would have to have a claim and pay a claim out on it.
And that's new language, because we've done this bill in the past, correct? Didn't we just do this bill last year, the year before? And so is this, I'm not sure what brought about this bill as far as any changes go. Do you know why?
I think we've had maybe over the last 5 years, we proposed, I think working with the committee and the insurance department, legislation that's basically exactly the Model Act that the NAIC and NCOIL have adopted. And I'm not sure if it's come before the committee in a hearing or it's ever been reported out, but this is still that same effort. And so we've shared, the language before, and just the version before you that was introduced is not the model that we've been discussing.
Okay, I appreciate it. Thank you very much for your testimony.
Thank you, Representative. Thank you for your testimony. I will refer your documents to both co-chairs to make sure that they understand that you are proposing the Model Act as written. Am I correct?
Correct.
All right. Thank you very much for your testimony.
Thank you, Representative.
All right. Now we have Dr. Olson. Are you with us now?
I hope so. Can you hear me
Yeah.
okay?
Okay, very good.
Oh,
Thanks.
wonderful.
Welcome.
What a relief. Thanks so much to the committee for having me today. And yes, my name is Chad Olson. I am actually not a doctor, but I do work for the American Dental Association, and it's my pleasure to work for and with doctors. So I rise today in support of the amending the CSDA proposed medical loss ratio into 5251. And my comments are really to bring the national perspective and to tell the committee the why now on a medical loss ratio for dental plans. And I've had the opportunity to speak with a few of you about this, but really it comes down to a question of the value that the plans are providing to the patients that they're meant to protect, the end users. And everybody knows the story of inflation and how things have shifted, prices are going up. And how does that impact a plan that has stayed fixed with an annual maximum of between $1,000 and $1,500, with cost sharing on the major services like root canals, et cetera, of 50%. It has meant that the value of the plans has decreased. And it has also meant that consumers, you saw it reflected in another testimony, that patients come in and have issues with their dental insurance that make it a struggle more than it needs to be. And that is the why now, why 72% of voters in Massachusetts voted to approve the model. So currently we have legislation pending in 13 states on medical loss ratio. And I think a lot of that is building on the reflecting the win in Massachusetts, the voters really demanding change on this issue. But I wanted to just address some of the questions that came up and then take some more if the opportunity arises. Number one, on the National Council of Insurance Legislators, the model that is available for states to consider. I agree with the previous speaker that there is an opportunity for Connecticut to look with a very tight piece of legislation that's based a lot on what occurred in Massachusetts with a similar demographic. There's an opportunity to really, in Connecticut, address the issue and go right to the heart of it, which is making sure that most of the premium is directed to patient care. But the details on the NQUIL model, or the highlights, I should say, on the NQUIL model is that it pegs to a mean or an average of the plans in the state and works toward establishing a medical loss ratio for certain plans that do not, that are egregiously not providing this care. And the thing I would really point out to the committee is in negotiating that or working out this agreement, the payers agreed that at some point a dental loss ratio, a medical loss ratio is appropriate for them to have to abide by. So that's, I think, the key message of NQUIL. And next, in terms of the plans that we've seen the data on around the country and what percentages, there are certainly, as a previous speaker indicated, plans as low as 15%. We see some plans in California that are at 7%. And those are the type of plans that the question was asked, is that really insurance? Is that really coverage? Well, what medical loss ratio does is it shifts this coverage to be more like what people expect now, which is
Your
insurance.
3 minutes are up. If you could please summarize.
I will. Thank you. I'll just close by saying I can answer more questions about the national perspective and data. I support, as the previous speakers, amending the language for a medical loss ratio into 52-51, and I'll stop there. Thanks for your time.
Thank you for your testimony. I do have a question. As far as costs of insurance plans in Massachusetts, I think Dr. Freed mentioned Maine. Do you have any data on what this has done to insurance costs for dental insurance?
So yes, thanks for the really excellent question. So there is a provision, and this is also is in the proposed legislation in Connecticut. There is a provision in the Massachusetts law that says that plans cannot react to medical loss ratio by raising their rates beyond dental services CPI, so the cost of providing dental care, and that's an important protection. And then I'd also point to the fact that while medical loss ratio did impact some of the major medical coverage, rates did stabilize and the carriers did adjust. And we expect the same on the dental plan side.
Thank you. Any other questions? Thank you very much for your testimony. And
I'm glad I was able to get in. Thank you again for your patience. Have a good day.
Very good. Thank you. And with gratitude towards the staff in the building who made this job easy, we will adjourn this meeting.